All right, welcome back everyone to another episode on the Financial Summit YouTube channel. We are back with our weekly update with Mark Wood on all things markets TA. Very interesting situation. I'm not sure when the last time you and I did a stream. I don't really remember anymore. It's been a very hectic couple of weeks and it's unconfiscatable. What really stands out in my mind, Mark, was the show I did with Socrates. I don't know if you caught that show that I did with him while I was visiting him in Colorado. I was coming through Colorado, and let me just also make sure that we are live. Yes, we are. And I'm not sure why that wasn't working. Now it is. Okay, great. And the price of Bitcoin was like 62, 63, and he was very convinced that there was a pullback coming to at least 60 and maybe even lower. And here we are with that pullback. He also, discussed why he doesn't like the 4-day chart for uh, for Consensio because the weekend, though the candle that's mostly weekends shouldn't be treated like the candle that isn't because of volume. But we got a lot to discuss here. So uh, let's just dig into it. I'm not going to show my charts. I've been showing my charts all week. So this is going to be all you. Feel free to jump right into screen share or have a few comments before you do.
Uh, yeah, we'll jump in. Yeah, I do remember we chatted about the 4-day idea and the 5-day idea. I still like it, and I do combine 4-day and 5-day, um, because the looks are super similar, but sometimes they're giving you different information at different times. And one of the reasons I like the 4-day is or the 5-day. Well, first of all, Consensio respects it, but it also sometimes gives us a look into the weekly closes or what to expect from the next weekly close, depending on how the candle is closing. And in fact, I do believe we just had a 4-day candle close recently. And so this is going to be, I believe, for me, a bearish biased episode that we're going to look at a couple of things. The last one we looked at, we were really zooming out and taking a look at some really high time frame confirmed moving average crosses, suggesting that it is still early in the uptrend, or at least the strongest part of the bull market has not begun. I still kind of am holding on to that idea, but we have also discussed that time as a factor, and I really needed to see this week and next week, and then really basically after the first week of October. So there might be a little bit of time, but I'm seeing Bitcoin running out of time, which is allowing some moving averages to roll over and cross bearish. That is a little bit concerning. So we'll jump right into that. Really quick, the very first thing we'll take a look at is this is just a Heikin-Ashi simple moving average strategy. We almost got a bullish signal, but if you follow the rules of this, so what you're looking for on this is the red moving average. So these moving averages are not ones that I typically use. It's a 12 EMA and a 26 EMA. But what we are looking for is a green candle close with the red cross back above the black. And if I zoom in here, we can see we almost got the signal. But right here on this last candle that closed, the red moving average got rejected, and now we can see the prices below both. So this is still a cash position, not having you enter at all. And now what we're going to look for here is this area at around 61.1 to be flipped to resistance. And if that's the case, we will see something similar to what happened here on this failed signal. Here's the bounce right here. So here was the bearish cross, kind of like a failed signal, big red candle, and then the bounce back up to black on August 8th into the 62.5K range. That was a rejection. the next candle rejected, the next candle rejected. So now we're really getting confirmation that the black moving average is resistance. We haven't really gotten that confirmation yet, but we're 61.1 on this particular look and this particular system is going to be key. And we got to remember, these are Heikin-Ashi candles, so they're going to be giving us different price readings, okay? So just to see what, if Consensio agrees with this, let's just take a look at Consensio on 4-day and 5-day. And it's pretty simple. I don't even have to put on the other moving averages because the black moving average is key. Which price is below it, and it's trended down. So Consensio on 4-day and 5-day is still going to have you in cash. But let me show you one thing I was looking at. The reason I've got this yellow moving average pulled up is because this is one of the moving averages that I added to Consensio, which is the 21 EMA, which is relevant on any and all time frames. And if we can see, I have been considering that what has been happening with this move up to 65K was similar to the end of the consolidation period last summer into October. But one thing that's happening that I am not liking at all is we saw the price finally begin to pick up the long-term moving average, and the 21 EMA crossed above, and we can see how bullish that was coming out. That basically that cross took the price from $33,000 up to $45,000, 10K move before any kind of major pause, and eventually really took it up to 50K. So I was watching this cross very closely, and I was really wanting this last 4-day candle right here that just closed. We're on a new 4-day candle that began yesterday, and as we can see, we had a major dump going back below the long-term moving average and the yellow 21, and now we need to see if there's going to be a rejection. If the yellow 21 eventually flattens out and crosses back above it, I'm going to hold some hopium that it will pull the price up, because we can see on this chart, anytime we've gotten the yellow moving average, even if I go back to the lows off of 20K, anytime the yellow moving average has crossed back up, and Tone, this is one of the reasons that I loved the 4-day. It's one of the things that made me start taking a closer look, is how well the moving average held the test coming off of these 28K lows after the cross. Okay, so 1, 2, 3, 4 candles held this 40K range, and then once back above the support of the yellow, we got that secondary move. So and again, here was a failed cross right here, because the bear market was beginning to dig in. So what I would like to see at this point is the moving averages cross, a move back up around 65, 66, 68, and then test maybe one more time 62K. However, if 61.5 is presented as resistance, and if we go back to the Heikin-Ashi chart, it's also telling us 61.2. So both of these systems are agreeing that let's just call it 61.5 to be a little bit more conservative, needs to flip back into resistance, into support, and not be resistance. So what do you think about those two general lows, Tone?
So look, I like the idea, but this idea requires preconditions, right? So I generally don't want to spend too much time talking about what might happen after something before it still needs to happen, right? So I don't really like, I'd rather talk about the probability of getting to 68 before pulling back to 62, right? Like, because we're already focusing on what's going to happen in like 6 months from now, right? Like, so I'd rather, like, it's just not, uh, the thing is, I don't know, right? Like what I would rather focus on either the shorter time frame, which is what is it going to do this month, or the longer time frame, what do we think it's going to do 6 months from now? But I don't really want to spend too much time talking about how it's going to get to 6 months from now. Does that make sense?
Yeah, it does. Okay, so now let's go over to let's go over to this chart here. Okay. Now we are on, so this is just my overall cyclic moves, timing tops, timing bottoms. We've seen this chart before. We are currently on day 166. Yesterday was day 165. If I zoom in here, this purple shaded area is the timing after the halving to where we are currently. We're at day 165. Now, 2020 began to gain momentum right at around this period, 164 days. 2016 also began to get some momentum off of these consolidating highs at around 162 days. So this is the timing, outside of several other things I'm looking at, this is the timing where I'm wanting to see momentum to the upside. However, we're getting momentum to the downside. So here are a couple of concerns that I have. I've been on Twitter and I've done the analysis myself. Like, basically, in an election year, in a September in an election year, which Septembers are typically red, but when we get a green September in an election year, October and November have been very, very bullish. So this is a pattern now. It's only happened twice, but this is a pattern that people are able to start to observe and has gotten everybody mega bullish. So of course I'm seeing tweets about October, and I mean, I'm bullish based on statistics because October typically is about a plus 20% month. We're just not seeing that quite yet. But here's one important point to point out. Back here in 2016, after this long post-halving consolidation, the price was only at $11,000. Okay, so it was half the price of the prior all-time high. And back in 2016, when the price began to get some momentum, it was only trending at around $800, still below the prior all-time high. So one of the things that is actually different about what's going on right now is that the price is very, very close still to the prior all-time high. If we had not had this major run coming from the ETFs leading into the halving, which basically took the price from news of the ETFs is coming out, and then early in 2024, right here, January, the price was $38,000. The ETF news and also them accumulating Bitcoin basically ran the price from $38,000 up to $74,000 prior to the halving. So that was a bit of an anomaly. My question to you, Tone, is this. Since Bitcoin at this period, last halvings, still was less than half the price of the prior all-time high, which is $64,000, can it withstand a drop to, let's say, $40,000 and still keep the overall cyclic trends happening? So now we are going to zoom out and look about 4 to 6 months ahead. What do you think about that?
I think it's unlikely, and I think it would be scary because of how far we have gone since the halving, right? Like, I'm sorry, mining is not profitable. Maybe it's just not profitable for me, but I know that if the price goes below 50, a lot of miners are in trouble. And I don't want to see it go back to 40. I think there could be issues, not to mention if we go that low, these ETFs are going to start to unload more Bitcoin onto the market, right? So look, I don't mind that 40-50% correction, but I think right now is a very dangerous time for that to happen. that 40-50% correction needs to come from a $100,000 price. Well, like maybe not 50% from there, but or maybe $120,000 price. So the reason why it was a lot easier to handle a price that low versus the prior all-time high was because of the halving proximity. It wasn't there, right? It was either right before the halving or it was right after the halving. We're not right after the halving. We're like 6 months since the halving. And this is why I think time is in our favor. And I've been saying for months and months that October is the time when Bitcoin is going to really establish its bullish trend. And we did just hit 64,000. That's very, very close to the all-time high. We're pulling back to 60. I I don't think Bitcoin is going below 58. And if it does go below 58, I think it's only going to spend a few hours below 58. I do think I'm not scared of 50 or 40. I mean, I will be if we get there, but I don't think we will.
Okay, so I might disagree with you on that a little bit, Tone, because I believe that if it goes below 58, 59K, it could actually trend below 53K. And then perhaps much lower. And I'm going to show you something that I've been looking at that does have me concerned a little bit. I'm going to show two things, and these are a little bit of zoomed out looks. So last stream, I showed an argument, a very, very bullish argument to suggest that gold is leading Bitcoin, which I believe long term it still is. I still believe that once Bitcoin pulls above 70K, it is going to make a very similar move to what we've seen in gold. However, it might take a little bit longer time to get up to that 70K than even what I was thinking, because I was anticipating as long as October and November trend like they do historically, we should see Bitcoin above 70K in November. And we really should see Bitcoin above close to 100K by the end of the year. Statistically speaking, not technically speaking right now, because that is not in place. But let me show really quick what I'm looking at that is a little bit concerning. I have a theory that it's possible that our beloved Ethereum is telling the crypto market what's going on right now. And this is one of the biggest moving average process that I track on any asset. And we talked about it on Bitcoin. We'll take a look at it in a minute. But when I zoom in, so let's take a look. This is the 55 light green EMA crossed above the 55 dark green SMA. So EMA above SMA, always bullish. EMA below SMA, bad news. Especially on something like weekly, because these are not easy moving averages to move around. So Ethereum has not been around as long as Bitcoin, but we can see that when the cross came after the 2017 top, that was confirmation of the bear market. And when I zoom in and take a look at what that looked like, we can see the moving averages cross and then a test up, consolidation, another test up, and that was final confirmation. And Ethereum dipped into the bear market. Now, here is a secondary cross that took place right after COVID, where the low was in. So this has got to be what we are hoping for right now, is that the low is in prior to this cross, because once Ethereum got itself back up above the dark green, 1, 2, 3, 4, 5, 6, 7 weeks above it, it was golden. Then we had the cross, the bearish cross after the Bitcoin 69K top. And 1 week, 2 weeks, 3 weeks, we're able to sustain above this moving average. But once the price dropped below it and tested it and confirmed it as resistance, Ethereum capitulated. So that cross just took place, and it has already seen one rejection. Now, if it's like 2019 or 2020, the low is in prior to the cross. But what we would need to be seeing from Ethereum is for it to trend above $2,700 for about 5 weeks to establish this no longer as resistance and allow the 55 EMA to cross back up, and then the structure would be incredibly bullish again. But I am not liking 1, 2, 3, 4, 5, 6 closes below both moving averages and testing and rejecting both of the moving averages on this last weekly candle. That is not a good look to me. And if I go to the total market cap, which often has information that we completely ignore, because the total market cap told us about the top in the last cycle. It is looking similar to Bitcoin, where the cross has not taken place yet. But as we can see, it is a magnet. It is trying so hard to pull the total market cap down. And when I put Bitcoin on there, we're going to see these moving averages postured similar. Now, Bitcoin has more information and history for us. And if we're just going with statistics and going back through over a decade of history, every time these moving averages have crossed, the price has gotten pulled below every single time. So at this point, what I was wanting to see and what Tone and I were talking about on our last stream was this moving average, the light green 55, to be pulled up with price, but I wanted this week to be bullish and I wanted the following week to be bullish. Now it's looking to me like it's going to be very difficult to avoid this cross because this moving average is slow. It's going to continue to rise, whereas the EMA is reflecting all of this sideways price action and it's starting to level out. So, Tone, what do you think about that theory? That Ethereum has already given us the bearish signal, and we're perhaps 2 weeks away from getting this cross on Bitcoin.
So I'm not as concerned as you. These are both 55, correct?
Both 55 EMA.
Can you hold the chart? Don't mess with the chart. Can you hold the shift key on the first candle and go back? Yeah, hold the shift key, or you have an Apple, whatever the shift key is on Apple, and go back 55 candles. I want to see where it begins.
Shift like this.
Is that 55 candles? Right.
Yeah.
And now bring it down so I can see which candle that is. Just like bring it. Yep. Okay. So here's the thing, right? For I still think that as long as we start getting green candles, I don't think we're crossing anytime soon, right? Because we're eliminating very low candles, right? And you have the light green is exponential or the dark green is exponential?
Green is exponential, dark green is simple.
The dark green is simple, the light green is exponential.
So the dark green is going to continue this trajectory. It is going to continue to rise.
Right, but so is that one.
Yeah, I think that it's possible with each cross within this month, within like the next 2 weeks. And this is why I'm seeing time as a factor, because maybe
I would be surprised if we're below 65,000 at the end of the month, right? So I think, yes, we can get a bad close this week, and maybe we get a rough close next week, but I still think we're going to close this month at a new swing high.
So this chart is still in this, what I'm considering to be a very long-term bullish pattern with this cup and handle we've talked about. And Tone, you and I discussed several streams ago the remote possibility that coming into the election, the green vertical here is the election, that this trend line on the bottom of the wedge got tested one more time. Now I could make this a little bit more conservative and connect. Let me connect the closes, so it's
Yeah,
not.
I'd make it more conservative.
Yeah, so it's not so extreme.
I don't think it's gonna happen. I think, yeah, but when we discussed it, right, the touch was gonna be that candle like 4 weeks ago,
Correct.
right? If you want to put your cursor on that candle 4 weeks ago.
Right here. Right
That
here.
one, right? Like that or the week after. I do not expect that line to touch because first of all, we're already into October and now the line's even lower. I don't I have a very low probability of that. That's not what scares me.
I'm not. I don't have a high probability on this right now either. I will put a much higher probability on it if in the next week or two we do see those moving averages cross. I'm just going from a statistical standpoint that the price, for the price not to get pulled down to at least 53K would be against probabilities and against statistics. And this does allow for a drop into the mid 40Ks prior to the election and still maintain everything as far as the structure concerns. The MAs won't be bullish, but the structure could still be bullish, allowing for a move post election to finally break out above here and trend up here. So I'm just what I'm trying to point out. Let me show one thing I'm watching on the monthly as well to zoom out a little bit more. So on the monthly, I'm going to take a look at two moving averages, the 10 simple and the 8 EMA. Okay, on the higher time frames, we can use some smaller moving averages. Now, Bitcoin got a bearish cross on the monthly with the 8 EMA, which is the orange, crossing below the 10 SMA. Okay, typically, historically, that is a very, very bearish cross. That cross basically ended the bull market in 2014. Once they crossed negative, there was a nice bounce up, but the red moving average was resistance and price could not get above. After the 2017 top, that helped confirm the bear market was in. You can see the price resisting. It's very, very clear. You can see the price resisting the 8 EMA once it crossed bearish. 1, 2, 3, 4, 5, 6 months and finally capitulated. And then COVID, same thing. So it could only maintain one close back above the red with the orange track below it, which led to COVID drop. And then there was one other time where these moving averages crossed bearish, which did not end the bear market. This was an anomaly because we got the bearish cross. However, the thing to pay attention to is that there were no monthly candles closing below either of these moving averages. However, look what happened. Look what happened on the first month that closed below both moving averages with the bearish cross. That confirmed the bear market. So what we have right now are the conditions, the potential conditions to bring the price down. Now let's see, the orange moving average is at 59,600. The red moving average is at 61,300. What we would like to not see in October with the cross bearish is even the month to close below 61,000. Okay, I would consider it to be a little concerning if October closed below 59.8. However, even just closing below 61.3 would be a little bit concerning. So, Tone, what are your thoughts, opinions, concerns about? Let me zoom out so we can just see what this looks like throughout history. What are your concerns about this, if any? Zero? A little bit?
It's not zero, it's very little. It's very little. I've been, like I said, I've been saying for 3, 4 months, we just got to make it to October and October is gonna solve all of our problems. October has started with a downside for the first 3 days. I'm not concerned about that because October has 31 days, right? So we've gone 10% of the month and we're down. Like if we're sitting below 55,000 on like October 20th, I will start to get concerned. Until then, I'm expecting a complete reversal this month, right? Like the market has to prove to me that this October is not going to be bullish. So this is why it's like unless price falls like 10,000 in a few days or goes up 10,000 in a few days, I almost have nothing to say and I have no reason to comment or stream. Like to me, this particular month of October is all that matters from a cyclical perspective. And this is one of those months where I'm not even paying attention to most TA this month. The only TA I'm paying attention to is I want to buy the dip on an MRI buy on a daily scale because it could come in at 58 or 57. And that would be perfect for me, right? I will take a swing at that. I very rarely buy the dip. I need, everything to align to buy the dip. I buy the dip maybe twice a year, 3 times a year, right? This would be the buy the dip, right? And I'm not even looking for a big buy the dip. This is going to be the shallowest buy the dip I'm willing to buy because it's October. Okay, I have historically talked about October for years and years and years that October is the time to buy speculative assets. And once a decade, you will be very, very wrong, but you will be right the other 9 times. Maybe this is the one time where I'm going to be wrong, but that's okay because I've been right the past 8.
No, that's a good point. And actually that price range of 59K, I like it as a potential dip to buy, depending on the conditions if the price gets there. MRI count, we are on a so here's your perfect condition for a buy the dip in October. Current count is a 4. 5 days from now, price continues to bleed slowly, but without any kind of major move down to right around here, which would be the bottom band at around 59K. Get an MRI buy at 59K. Are you buying that? Are you buying that dip in 5 days, Tom?
Yes, ideally it's a little lower than 59, uh, because
Probably would get
uh,
pushed a little bit below.
right, ideally it's closer to 58, only because I wanted to hit a trend line. If you draw a trend line, if you take the bottom of that giant wick in early August
Early
and you
August.
align that early August,
Where August, early August.
Early August, yes, there you go.
Yeah.
If you take a trend line off of that low wick,
Mhm.
right, and you run it through the secondary low,
The close or the wick?
uh, yes.
Sorry.
The answer is yes.
Let's do the close for now.
Correct. Do the more conservative one, right? Let's do the close. That's my trend line. If I can get an MRI buy with a low on that trend line, with a reversal candle on the MRI buy or the candle before or the candle after, ideally not the candle after, right? Ideally the candle before or the candle of. I need one more thing. I need tomorrow's candle to be a doji-ish candle. So I want to avoid the catastrophe tomorrow. So tomorrow's candle needs to be closer to today's candle or yesterday's candle versus the two big ones.
Okay. I got you. So you do have a near perfect storm scenario setting up, Tone, where in 5 days ish. If we just continue to see the price move sideways and down, it's going to tap this trend line. Let's see, October 3rd, 4th, 5th, 6th, 7th, 8th. Oh, right here at a perfect area of where I have some horizontal support marked as well, around 58.4. Okay,
Right. So what I want to see is I want to see consolidation now and then a crash to that area. And I don't mind us going lower than that area on the intraday swing. In fact, the lower we go on the intraday swing with a recovery, the more confident I am at buying at that trend line. So consolidate another day or two, then start to move down, and then capitulate down to 57 around October 8th while closing the candle above that trend line. That buys me the perfect early to mid-October dip. And now I'm just going to sit on that trade, probably a leveraged version of that trade. I wish options were already tradable, but I have to wait till January. And this is my potential all in, but it's hard for me to say what I'm going to do because I don't know what the price is going to do, right? Like if the price does what I want it to do, then that is my confident buy the dip. Again, I go back to my favorite buy the dip of this decade, which took place at $25,000 back in 2021, I think. No, 20. I don't remember. You have to go back. It was the perfect MRI. You have to turn on the MRI though. There was it wasn't in 24. Yeah, keep going, keep going, keep going. There it is. There it is. That big second. Yep, right there. If you zoom in on that,
yeah.
if you zoom in on that, then you put the MRI on. That is what I want to see, but not as deep this time. There it is. That's what I want, right? You see how it consolidated for like 4 candles and then fell for the last 3 candles?
Yes.
That, right. I want to see this repeated.
Yep. Yep. I'm totally tracking with you. And you know, there was that drop there also was part of here. Let me remove the MRI real quick. It was actually a perfect storm because I can take a trend line off of this 69K top and look at that. That is an absolute textbook bump and run at an MRI buy.
Right, and then draw another one off the low.
Off of these lows?
Right, but the next low was the lower one.
Yeah. Right here?
Yeah. But if you use the wick, it's better. If you zoom in, you'll see.
Like this.
Right. It didn't quite make it to it, but it was good enough for me.
Well, right. Anything that would have been down to around $18,500. But I bought that two-tone based on the MRI buy and testing this breakout. This is something we see in crypto a lot.
Mark, there was also 2 moving averages there, the 200 and the 128. If you turn those on, you'll see.
128, 200. Right there. Oh yeah, look at that.
Right. I mean, that was my perfect buy. I was very adamant about that, and I remember I was in some Twitter space with all of these, finance people. Like a lot of them were traditional market, some of them were Bitcoin. It was like a big space, and I was a speaker, and I literally said it was the candle after. If you zoom in on those candles, it was Bitcoin was like just breaking 22,000. It was zoom in, zoom in, zoom in, zoom in. When was it breaking 22,000? Go to the third candle, the third green candle. It was the beginning of the third green candle. It was like right there. And I was so adamant in that group that this is the buy of the decade for Bitcoin. And
Yeah.
I got fucking roasted. I got so roasted in that group. It's like, that's irresponsible. You can't say that. You can't be sure that the price of an asset is gonna go up. And I literally said, you know what? Fuck you guys, right? This is the greatest TA confluence I've ever seen. And if I'm not all in on this one, I don't deserve to speak. And I kind of left the group and I told them all to go fuck themselves.
So you could be super conservative and wait for these swing highs after this consolidation, like at around 22.6 or 7. Wait for that to get taken out, and then I agree. But what tone is showing here is this is a moving average cross I watch very closely on several time frames. This is the 128 simple moving average crossing back above the 200. And then once they both start angling back to the upside, then that's even more bullish. So basically, tone is 100% correct. This was the most perfect technical buy that we'll see in Bitcoin probably in a long time. I mean, it was a daily MRI 9. It was a bump and run test. It was a moving average cross, a major moving average cross, right? So
Don't forget the most perfect candle ever. And there's volume.
right on a reversal candle with volume, exactly. So here we are, Tone. Now I have discussed the premise that this consolidation is similar to July, August, September, October 2023. However, there is something slightly different taking place, which is fine. We don't need everything to repeat perfectly, but there is something with this cross that I am not liking that is keeping me at least cautious. So right here, back in the summer of 2023, we can see there were 2 times. So look, there's the bullish cross that we're talking about right here, and then there was a drop back down, and then the sideways move price almost. In fact, it did cross the 128, and right here. So this was a bit of a bear trap because 1, 2, 3, 4, 5, 6, 7 rejections of this bearish cross would begin to have even me being bearish. And yes, there was a drop, but it was a higher low. And then once the price started closing 1, 2, 3, 4 candles above the bullish cross, that was it. So if we're going to replicate something similar, this is what we need to see. And I'm sure that this is going to mildly agree with what we looked at with Consensio and the Heikinashi chart. So what is happening right now is not good because the 128 is sitting below the 200 on the daily. That's a bearish cross. And the price has dropped below both. And on the last daily candle came up and tested the 128 and was rejected. So it is beginning, if we're going to get a third close, fourth close, 4 days closing below. So now these lows right here have to be protected at 57.5. So Tone Base wants an MRI buy, preferably not taking out 57.5 because that would take out those swing lows.
Right.
Which would make it, yes, we might get a bounce back up.
No, I don't mind. I don't mind if it's on a swing. I don't want to see a close below that.
Close. Now, let me ask you this, Tone. Are you more concerned about a close below this low close or a close below the swing low?
Uh, I'm I, I'm not concerned about those 2 candles at all. Let's so the dates on those candles is what I'm looking at. I was actually the date on those is September 17th. I'm not concerned about that dip. To me, that's not even a dip, right? What I'm concerned about is getting too close to the September 5th dip. That's what I'm concerned about, right? Like to me, the dip on September 16th is irrelevant. I don't want to be too close to those. I want to be significantly noticeably higher versus the September 6th intra candle low, and I want to be significantly higher versus the September 16th candle close. That's my concern not what happened on the 16th. To me, what happened on the 16th is irrelevant completely.
Okay, so one thing that is interesting is this low here that Tone is talking about. This is the data September 6th. It swung down to 52.5 and closed at 54. I actually bought this dip based on TA as well. But it wasn't MRITA. It was other stuff I was looking at.
I did not. That dip gave me nothing. There was no MRI. It was a double bottom versus the prior lows. Like on my TA, this was not buyable.
Yeah,
But everyone needs to have their own system. My
exactly.
system did not allow me to buy that. For me, that's a sell in that area. And obviously, those that bought did well. Those that sold did not. You have to trust in your TA. So for me, there was nothing there.
Right. And so what Tone is saying, I think, is really important. So he's got a system, okay, and he's going to be super patient and wait until the setups that he has grown to know and trust present themselves, and he's not going to force a scenario that isn't giving him that situation. So for me, I actually bought literally, and I've got Telegram post proof of saying I literally bought this dip at 50K and I bought this dip at 52.6. But I've got a system based on looking at a bunch of moving averages, and I also use Socrates' MSR in situations like that. And it was low risk. It was very low risk area to buy at the time on lower time frames, not on higher time frames, and it just happened to work out. But going back to what's happening currently, we are now seeing the third day consecutive close below both moving averages on the bearish cross. So in order to recreate something similar to October 2023, this is what we're looking for. Having these
Oh,
moving
by the way, and it was October, right? Like
averages,
that was another thing we didn't mention, right? That was also very significant for me that all that confluence of TA also happened in October.
so what we are currently going to look for, and this is a super subtle thing. You know, Tyler Jenks taught us not only about understanding which moving averages to consider looking at, but the posture of the moving average. And currently, the daily 200 is rolling over, which now, what this tells me, if you understand moving averages, when you have the 128 cross below the 200, that is meaning that any bounce up to 63.6 is going to be a sell if you are considering buying the dip and trading. Okay, this is going to be resistance until it's not. And as we can see back here in October 23, it also began to roll over, and what I just said actually played out. Like anyone who bought these lows, let's just say somewhere around 25.3 as a trader, as like a swing trader, and sold up to 27, they were happy with that trade. That was a 10% move, right? But the point being that the next time the price bounces into the 63K range, it is likely to be resistance until it's not. So what at this point, just based on the daily time frame, what we need to see is we're going to be looking for, I would say, at least a minimum of a week closing above 63.5K, which will flatten the moving average out eventually, and then allow the 128 to roll over and start crossing back up. So this is kind of defining, let's just call it $64,000 for right now as a key area. It still will be a lower high, but if that area can get flipped and resist to support in October, then I become less bearish as well. Would you agree with that, Tone?
Yeah, I agree with it. Can I just throw like a random crazy idea and that makes no fucking sense whatsoever? Uh, in that if you look at the beginning of this year, and how much we went up in the beginning of the year.
There,
And a lot of that had to do with the ETFs, and we kind of distorted the market a bit, right? We were off cue on the 4-year cycle. We made a new all-time high before that halving. And a lot of that distortion happened because of the ETFs. So had this been a normal 4-year cycle without the ETFs, and again, like I said, this is a weird take, maybe these moving averages wouldn't be crossed over. If, like if we had taken a slightly different path up
yeah,
this year without the ETF distortion, we would be looking very good, and the 128 would not be below the 200, and with both of them declining.
that's kind of going back to the point I made talking about being 165 days post halving. Typically at this time, so if the prior all-time high price was 70,000, we really should only expect the price to have been coming off of these lows, $15,000 lows, a slow, steady grind all the way out to here, up to maybe $35,000, maybe. So this is the point that Tone is bringing forward is this run. So here's the beginning of the year. This is kind of the dip at the beginning of the year. January 23rd, it was a dip to 38,000. And then, the ETFs brought the hype, which rose the price significantly. Well, it doubled the price, basically, almost too far, too fast. And now we're dealing with the repercussions of that right now. So what Tone is saying, and I agree, is off of these $15,000 lows, um, had we just seen something more similar to um, just a grind up, a grind up, a grind up, and then landing somewhere here around maybe 40,000, yes, these moving averages probably would not be crossed, and we wouldn't be dealing with this bearish scenario.
Right. So
But
there's also one more thing, right? There's two things. So that's one. And the other one is we've been consolidating now for so long. And the longer we consolidate, the less relevance I put on moving averages. Now, you can have a very different take, and some people can have a very different take. For me, moving averages are most useful in trending markets. When markets are rising or markets are falling. Um, because the consolidation has now lasted for so long, I think the importance of moving averages has significantly diminished. And this is why, again, we're 6 months past the halving, we're in October, we're going into election, and I know the election year is a little strange, but of all the times, and I do like moving averages, but of all the periods of time, like I would say right now this month, I have the least emphasis on moving averages I have had in years.
yeah, that makes sense because the longer we stay sideways, you are going to get some bearish information and some big sweeping moving averages crossing bearish and reversing their polarity. So I do understand that. However, Tone, being said, the markets still respect these moving averages. And look, that cannot be more clear than what just looking at what happens here. Here is rejection at the 200 and finally a pop up to 128 and a rejection and a pop. All right. So yes, the posturing of the moving averages might have a little less relevancy, but they are still going to be respected in the markets. And I still think the TA is going to be the same. This is going to be resistance at 63.5 on the first pass, if and when the price gets up there again. And we can get bullish once we start seeing a week or two close back above this area. I would begin to start to get bullish. And one point to make is if I take off the moving averages, like I'm seeing people look at this. I've got so many drawings on this chart. I need a clean chart, but your eyes your eyes can just see that this is basically a descending channel or this descending broadening wedge. I've seen it drawn both ways. I've seen people calling this a bull flag. I can't see this as a bull flag at this point, honestly. Like maybe technically it's still a bull flag because it hasn't dropped below where you would expect it to, with maybe this being the pole, the run from 40,000 to 70. I'm seeing it more as just a descending channel or a broadening channel, which is still an overall very, very, very bullish structure. With the probability of breaking out to the upside very high. A descending broadening wedge is like almost 80% probable to break to the upside. But I believe that some things are unfolding to give one more drive to the lower trend line to really make this structure mature. I'm not ready to go there yet, but if I do agree with Tone. If October is not closing bullish, Tone, what price did you say you want to see October above at the end of the month? 65K?
I want to see above 65K by end of month. Yeah.
Yeah, I would agree. I would agree with that. So we've covered that pretty well. Let's look at the lower time frames real quick. Let's just see what's going on with 4 hour. And we can see. So I have these three red horizontals drawn. That were based on not quite on the 4 hour chart, but it's close enough. And we can see how relevant these horizontals were as the price was trying to dig out of these lows in early September at that 52, 53K low. This horizontal was resistance. The second horizontal, the top horizontal was resistance. And finally, once there was trust that that this is around $61,200. This was basically the swing high of this 4 hour candle going back to late August. That got the price into this rising channel, and which eventually did fail. Okay, so now we're looking at this current 4 hour candle. We have not seen 3 or 4 closes below, but if I see, let's say, 3 or 4 candles closing on the 4 hour basis below 60.5, yeah, I think it's possible these swing lows are going to get taken out at 59.8, and maybe we start looking down here to the area of these lows, 59.4 perhaps. But I'm going to keep these 3 horizontals on my chart until I don't feel like they're relevant anymore. And it clutters up my chart, but I don't care for now, because this is a really important range that has not been able to be established fully yet as support on a long-term basis. We really need to see $62,000. I'm talking about 3 weeks, not just a couple of days, because this was several days from September 18th all the way until October 1st. So basically the price spent a couple of weeks above here, but here we are back down into this cluster of support and resistance with the price trending 4 hour candles below it. So I'm still leaning for the price to trend a little bit lower. And when would the MRI be, Tone? What did we say this was?
On the 8th.
28th. So here's the 8th right here. Again, kind of setting up the perfect scenario, perfect storm scenario. 8th of October, wicking into this area of support and this trend line that we just drew in the $57,000, $58,000 range. So not financial advice. That's just something that we're looking at. If I take away all of this and just go with my simple look of the Bollinger Band and 2 moving averages, we can see really quickly that this is a hidden bullish signal right here with the yellow 21 crossing back up the mid band. However, the price is not going to get pulled up to 62K until until 60.1K is no longer resistance. Let's take a look real quick at RSI. So I don't really see any. One more drive lower, like down to 59.3 would get a little bit of bullish, a little bit of that bullish divergence, but I don't really see anything significant now. This is still suggesting lower. The daily chart is also telling me lower because anytime both moving averages are crossed below the mid band, the bottom band is a very, very high probability, like very high. I'd say
Right. No, and I want it to go lower, right? Because if it starts to go up tomorrow, I don't have an entry. I have to wait for new swing highs. But if it goes lower, I have an entry at 58 on the 8th on
so.
Monday, and it's in the beginning of the week, right? So we got what's today? Today is the 4th?
Yeah,
Today's
third,
the 4th, right? Third or
third,
fourth?
third.
Today's the 3rd. Okay, so Friday, that's the last volume day. So Friday's the 4th. And then 5, 6, 7, yeah, Monday, Tuesday is the best time to buy. You know, it's a positive week coming in. And on the weekend, I don't expect a crash on the weekend. On the weekend, volume tends to slow down. So I just really want to avoid the big capitulation candle tomorrow. Tomorrow is the big fear day because if we get a big capitulation tomorrow, it becomes very difficult to get the MRI because tomorrow is the 5th candle. That's the middle candle. The MRI candle would now need to be lower.
Yeah.
This is why I would rather watch us a little bit, watch us go down later today. And tomorrow's candle is a green candle. Like I would need that green, I need that 5th candle to keep us above 60. If the 5th candle can close above 60, that sets me up perfectly for an MRI buy Monday, Tuesday.
Yeah. Let me just show this really quickly. Going back to these highs in May, end of May, we're at the price at around 70,000. So here is the bearish setup right here. Both moving averages are below the middle band, but this shows strong demand when the yellow holds. And then what you look for is a bounce back up to the top. But all the examples, there's 3 examples after that. Both bands below, or both moving averages below, go to the bottom band and then lower. Right here, both bands, both moving averages below, straight to the bottom band. Here's one more example, both moving averages below, straight to the bottom band. So as long as, even though the 4-hour is trying to pull the price higher, as long as both of these moving averages are below the band, and then we'll add one more factor to it. When the 8 crosses the 21, you're almost at 100% probability to, at the very least, go to the bottom band. So we will probably see this cross in the next day or two, unless there's some kind of a crazy bounce back up to 62.8. And that will give an even greater probability of the price dropping into the 58K range and potentially giving us a dip scenario. One of the things I want to start showing a little bit more is MSR, and MSR is fantastic. So let's see where 58K is on MSR. That is right. So this is Socrates' indicator that I love, and I use it all the time. I just haven't talked about it too much on Tone's show. But the 4-hour just began a fresh trend. So this is telling us, hey, be careful about getting too bearish, because it is not easy to get a bullish trend on the 4-hour chart. A bullish trend is when you see this sky area up here, we call it, on the top, and the ocean and the beach on the bottom. Now, what MSR does is shows you some very, very low risk areas to consider taking a trade. Now, the top of the blue area right here is sitting right at 58.5, which is right where my daily bottom Bollinger Band is. So I'm getting confluence of an idea. And what would be perfect, it's not going to line up on this series, but what would be perfect would be to get an MRI, a 4-hour MRI buy, along with the daily MRI buy at 58,500 in a few days. That that gives us kind of a perfect scenario. But let's take a look really quick at the lower time frames. I'm going to go just to hourly. And this is something interesting that we're seeing here. This is something Socrates calls a sky squeeze, which means the trend is bullish on the hourly because we've got the sky trending above, and it is in low risk zones. Like this dotted blue area is called the buoy. It's at 59.7, but with the sky dropping closer and closer, that is telling us volatility is getting low. And if you understand the indicator, there is a decent probability that the price is going to get pulled up into this direction at some point. But we have to find a bottom, which might take, let me see. So there is some divergence here on the hourly chart. So as long as, let's call it 59.6 holds on these hourly candles, there is a chance to get a swing up, which actually Tone would like to see because it would prevent that bearish daily 5 candle from popping in. A bounce now is fine, right? But this is also telling us that 61,000, this is only the hourly. So the moves are not going to be huge off of hourly. This indicator is showing us, especially as the moving averages trend down to this red resistance zone, that even a bounce off of 59.6 might only go up to 61.60. But this is telling us get prepared for a bounce, okay, on lower time frames. I'm just not seeing yet. So Tone, real quick, let's just take a look at the stock market in October, okay?
Yeah, Mark, and we gotta start wrapping this up soon. I got a call at the top of the hour.
No problem. I can be done in a few minutes. So Tone likes October's to be bullish in the stock market. However, when we went back and we took a look at what happens during the presidential election cycles, we see that Octobers are typically red. Red October, red October, red October, red October. This is going back several elections. In 2004, we had a mildly green October. But also what we are expecting out of the S&P is not too much. One thing that was a bit of an anomaly to me, is for the price to make a new high. Let me zoom in here. In September.
Can I slightly correct my position on October? It's not that I expect October to be a green candle. I like for October to be a green candle. My stance on annual cyclicity is as follows. September is a bad month. I don't like buying in September, right? Unless it's at the very end of September. My position on October is not that October has a green candle. It's just that by the time October ends, the low is in and we are in a bull trend, right? So that doesn't mean that the month has to be positive. It means that the low has been established in either September or October for that year. 2008 is an exception because of the financial panic, right? So, and it doesn't matter if we're in a downtrend or an uptrend, right? The point is there is prices pull back between August and they bottom in September and October. But October doesn't have to be a green candle. But before October ends, I'm usually in bullish positions.
Perfect. That Tone, and we can wrap it up on this because when I first brought out this election cycle chart, I mentioned that October, but by the end of October, if you have an interest in an asset in an election year, you want to be entered into that asset by the end of October. Okay, now that's a blanket statement. Okay, there could be 1,000 assets that doesn't hold true for you. You have to have some understanding of technical analysis. But if it's one of the larger assets coming into an election year, I have found that Exactly what Tone just said. Basically, what he's saying is the dip is in by the end of October, whether it's a red month or a green month. And post-election is, and it's funny. I mean, it's not 100% true, but this chart goes back to 96. Okay, 1996. Um, we can go back even farther, but let's just take a look at the Octobers. Here is October 1996. It was a bullish month. And if you bought anytime in October for the next 4 years, you're totally bullish. Okay.
Can you glance at October, like every October, not just the 4-year versions of it? No, right.
So here's pre-election October. Let's see. Uh, here is 1997 October.
October makes the low. The candle is red, but October made the low.
Never makes the low. And this was the crash. This was the crash of 1997.
Right. And honestly, if you bought at any point after that low, you did great, right? So you just had to wait for that low. I don't know when in the month that low took place. I'm assuming it was early October. This was actually before I started trading. I didn't start trading till right after, like I started trading on the tail end of the dot-com situation.
So here is October 98. We won't go through all the years, but we'll take a look at a few.
We can go through it faster. Again, same thing. October makes the low.
It makes a low. Now here is election October, right here. This was the dot-com bubble though, right?
It was the dot-com bubble, right? Again, like there's not much. Again, October made the low. It was starting to recover, but there's not much you can do against the dot-com.
Now here is October 2001.
That's a good one, man. That's a good 4 or 5 month run.
A good 4 or 5 month run. Let's see, October 2003, bullish, leading into the election.
Here, I think you missed October 02, but that's
October 02. Yep.
Again, marks the low.
Yep. So this is good stuff to know, because what Tone is talking about and what I look at outside of moving averages, like what Tone was saying, let's put aside moving averages, and there are cyclic things to be aware of. And we are in October prior to the election, and history shows, with two exceptions of 2008, 2000 and 2008, that buying in October is generally going to be,
and you're gonna be wrong once a decade, but you'll be right the other 8 to 9 times.
Exactly. That's exactly right. And so here is, let's just fast forward a couple of years. Here is 2012. It was a red month. There was a wick down here, the beginning, but see, now I also, if you want to be a little bit more conservative, you can basically say enter after the election or be entered into the election with anticipating the price might go down. But this was a case right here, Tone, where the low wasn't in, but right after the election, it was in, because there's a wick here. I don't know if you can see it.
Let me, I wanna check something real quick. I'm actually going to that. Oh shit, maybe not.
But that was a really nice.
I'm just curious where that low was.
Right,
man, I'm gonna steal a screen share for a second. It's just too cool looking. And then we go back to you. So I looked in. I just zoomed in on that October. So here is the October of 2012. We were rallying, we crashed, but I just wanted to point you to this. Look at this beautiful reversal candle on an MRI daily in the stock market. Came in November 16th of 2012. This was Obama's election, I believe, right? This was Obama's re-election. Mark?
Yeah.
You there?
Yeah, I'm here.
Okay. Yeah, that's Obama's re-election. And yeah, but I just wanted to point out, yeah, so this one didn't work out perfectly, but the bull market did continue then after. And if you did swing on October and missed, I get a second shot in November after the election, especially when you have this situation. This is what I want to see. A reversal candle the day before or on the MRI.
So, making a quick statement about Bitcoin, and we're talking about October lows from a historical standpoint. Lows are typically in by the 10th of October, which lines up perfectly for the MRI buy. So there are so many stars aligning for an MRI buy coming up in a few days prior to October 10th. And yeah, a drop into the 57, 58K could get everybody bullish or bearish, including myself. But history and technical analysis suggests maybe it's a good dip to be buying. We'll have to wait.
So I will, since I have screen share real quick, I just feel like going through it.
Yeah, go ahead.
October 2013. So here it is. We were consolidating. September was a green candle. October went down in the beginning, and then it kicked off more bullishness. So you can buy at any point in October, and you did well in 2013. In 2014, here it is, October. That was the big crash candle. October 2014, October makes the low. It goes up for months, eventually makes a top in February, March, and consolidates for 6 months. So again, if you bought in October, after the low is made, you did well. That was 2014. In 2015, here's October. Again, September makes the low. October is a nice bullish month. Yes, it started to dip early in the following year, but you still were in the green, so not a losing trade either. And again, here's October, red candle. This is 2016. So again, this is an election year. This is Trump getting elected. We all remember what happened that day. I was covering it live on YouTube. And yeah, that's not a surprise. But again, if you're willing to handle the election volatility, buying in October is still not a bad idea. And then the market went straight up. And 2017, here's October. There wasn't even a dip. You could have bought it any time in September or October. No dip takes place. Bullish. High is made in January. And 2018, October was the big crash month. It did find a low. We did go up off that low. 10%. It had a bullish November, and then December took a bit of a whack. I don't remember what was the problem in December of 2018. I don't remember this at all, but the market did eventually recover, and I hope this is nope. That's COVID. And here's October of 2020. Again, the lows are in, and starting November, everything goes up. So yeah, so the trend continues. I was very adamant about October of 2012. That was my perfect buy. Remember my S&P calls for the buy, monthly MRI buy?
Mm-hmm. Yeah.
I think there was a weekly as well. This is October of 22. Yep, there was. There it is. Weekly MRI inside a monthly MRI. I wonder how the daily lined up. I don't know if I'm gonna dig into it that much further, but I was very, very adamant about this buying opportunity on the stock market and by default Bitcoin. And if we go to October of last year, there it is. It waited until like the last week of October, but I was very, very confident that another October is going to bounce us. So why wouldn't I be confident that October is going to mark the low? And yeah, so for Bitcoin and for stocks, I mean, October is the best month. October marks the low.
There's so many examples of it. Of course, there's always an anomaly. There's always the chance of an anomaly, but so what would you so to strategize, what do? You just maybe look at the swing low of the month prior or something like that, and if you want to protect yourself. But
Since we've been somewhat consolidating here, look, I would just wait for strength or MRIs. I mean, it's unfortunate that the MRI top is coming next week. So 1 to 4 candle correction. Uh, it's very possible that the low is going to come on October 30th, right? I want to see my 1 to 4 candle correction play out with the weekly stock market. Bitcoin is still correlated with the stock market. Uh, I mean, maybe we get lucky, we get some capitulation in the stock market next week. The election is also coming. I mean, look, if you want to play conservative, you wait till November 7th, right? And then go long.
Yeah, yeah, I like that. I like that idea. Like waiting
Like,
going to hurt you. And typically after the election, the markets do move up. It doesn't matter which party gets elected. You'll hear a bunch of counter ideas to that, but maybe it goes up more if one party gets elected over the other. But I don't see anything so far that's out of the norm in that regard. Someone mentioned that Bitcoin 12-hour is on an MRI buy. You want to take a look at that real quick, Tone? We can talk.
sure, but I trust the daily so much more than the 12-hour
12-hour might
that
bounce that the hourly is suggesting is coming. Maybe,
I
maybe.
mean I like this 12-hour buy back on September 8th. That did well. That was our last one. Our last MRI buy on the 12-hour was September 8th. But the MRI buy on August 30th was terrible. It didn't work out at all. So our last two, and here's an MRI buy on August 2nd, didn't work out at all. And the daily probably did way better. If I go to the daily, no, not, no, the daily didn't have one at that. Oh no, yes it did, right here. Sorry, this is the area. Yeah, the daily did much better. This daily didn't do great. I would trust the daily here. I would wait. And if we have a bad day today, I would love to see a rebound tomorrow. As long as tomorrow's candle closes us above 60, I would be very, very confident we're gonna get that dip to 58 for an MRI buy. All I now need is a reversal candle on that day and touching the trend line. Things can line up here. And you know what? And if Bitcoin reverses, midway in October and starts to rally towards the highs, and the stock market is still struggling, waiting for the election, that would make me more confident in the stock market, right? Like, yes, Bitcoin is following the stock market, but that doesn't mean that occasionally it doesn't lead and pre-predict where the stock market's going to go.
Yeah,
It's like I gave this example, right? It's like um, you're on a motorcycle and you're following like a big SUV or a big truck, and you know where the truck's going, but you're more nimble. So for some stretches of the road, you're racing ahead of the truck because you know where the truck is going, and it feels like the truck is following you. But if suddenly the truck detours while you're ahead, you have to swerve. But that situation is rare, right? So it's kind of um, like 60% of the time you're following the truck. 30% of the time you're ahead of the truck, even though you're following the truck, but it feels like you're leading the truck. And then 10% of the time you think you're leading the truck, and the truck suddenly went in a different direction, and you go, oh shit, and you gotta very, very quickly catch up, but you're on a motorcycle and you're more nimble. That's kind of the relationship between the stock market and Bitcoin. Does that make sense?
yeah, it definitely does. And we can't expect them to be totally tied together and correlated all the time. What they are going to move independently. For sure, Bitcoin pulled I don't want to say Bitcoin pulled. Bitcoin led out of the COVID lows. It led the stock market significantly. It took the stock market much longer to get into a bullish structure than Bitcoin did. But they were both generally moving both bottom.
Right, right. But again, like this goes back to my example of you on a motorcycle following the truck, right? It feels like you're leading the truck because you're just faster and you're more nimble. But if that truck was to go in the opposite direction than you expected it to, you now have to turn around and catch up to the truck again. So So yes, Bitcoin led the stock market out, but had the stock market had a second dip, Bitcoin would have crashed again.
So we're basically a month out from the election. We're like in the heat of election madness, and I think you and I have both um, painted a decent picture of what our expectations are outside of politics, just from what the markets might do. And Bitcoin, if Bitcoin is going to create a low and continue trends and patterns, it's going to be on this next daily MRI buy or close to it. And I would want to see the low end buy around the 10th of October. The stock market could take longer. The stock market, as Tone was just showing us, might go into the end of October, but typically, for, at least for the S&P, and realistically for Bitcoin too, um, being in by early November typically is not a bad position to be taking. Do you agree on that, Tone?
Yeah, yeah, absolutely. All right, Mark. Oh, it's 1 p.m. Eastern time. We gotta go.
Good.
I'm gonna come off screen share. Hope you guys enjoyed this show. Mark, thanks again for your insights. We'll do it again next week. Hopefully, we're doing it next week on the day that we're reversing off of 58, and we will, uh, tell people how right we were. We'll see.
We'll see.
All right. All right, man. Thanks so much for watching, and
Yep.
I will see you all tomorrow morning with Matt McGregor. And I'm still gonna try to do a politics stream on my personal channel, and we don't talk politics here, just markets. All right, guys. See you all later.
Join in.